Hello traders, today we want to discuss Elliott Wave tips for a Forex trader. Elliott Wave tips for a Forex trader, alright? The Forex stands for foreign exchange, talking about currencies and currency pair. We are looking at the New Zealand dollar, Japanese yen. Alright, we want to talk about Elliott Wave tips for a Forex trader. What I'm going to do here, alright, is going to start an Elliott Wave count. I need to remind traders that this wave count is those wave count that one will come across that can be a little bit messy. So it's not a beautiful, gorgeous wave count as I look at this chart, but you will, as an Elliott Wave trader, Elliott Wave practitioner, you may come across, chart like this, a price structures like this, and you may be wondering, is this an impulsive wave? What is going on here? All right, so I need to tell you that before we start counting wave, and feel free to disagree with my wave count. So this is the first Elliott Wave, just one candlestick bar here. I'm on the monthly chart for the New Zealand dollar, Japanese yen. And this is my tiny second Elliott Wave right here. Going to color my second wave into red. All right, you may count your own wave and compare it to my wave count here. So you may understand exactly what's happening here. This is the third Elliott Wave. All right. Followed by a tiny fourth Elliott Wave, which I'm going to color into pink. All right. And then we have, the fifth Elliott Wave right here. Do you agree? Do you disagree? All right, put your comment in the comment section. All right. So first wave, just one candlestick bar. Second wave, all right, without canceling the first wave. Third Elliott Wave has been extended. It's the longest motive wave. Fourth wave, not overlapping the first wave. And the fifth wave right here. All right. Check it out. Is that something else you want to add to this? All right, put it in the comment section. All right. That's why I told you that this is not, all right. It's not dynamic trend as such. Okay, as you can see, it's quite a bit messy. Okay, now then we have what? Okay, so from here 1 2 3 4 5, all we can see at this point in time, this is an impulse wave. So when we count 1 2 3 4 5 waves without any Elliott Wave principle violation, we can only talk about an impulse wave or a motive wave. We understand that the wave count is a fractal. All right, so we are talking about wave count of a lower degree and a wave count of a higher degree. Always we use different time frame. By the way, this video will be posted at the 24 Forex Trader channel. But if you want to know more about Elliott Wave principle trading, subscribe to 24 Elliott Waves YouTube channel. Okay, digit 2, digit 4, Elliott Wave channels. All right. All right, so because this is about Forex, that's why I'm posting it here. 1 2 3 4 5 wave. This is an impulse wave followed by a correction. You can see that this also has been subdivided into 3 waves. This is a corrective wave. All right. So this corrective wave is correcting this impulse wave. So the impulse wave is starting from here and is ending here. I'm going to color it now into green. All right. So that impulse wave has been subdivided into 5 mono waves. 1 2 3 4 5. Now we have a correction 1 2 3 that is correcting this impulse wave. All right. Then we have another choppy price action here. Very choppy price action. Look carefully, my friend. Feel free to disagree with what I'm about to do here. This is another move up, like we see here, one candlestick bar up, followed by a second candlestick bar down like this, and then we have a third move up to this point, in fact, and then another move down. Can you see? And then we see another move up again. Do you agree? So let's zoom into it so you can see clearly on your chart. All right. So we see first 1, 2, 3, 4, 5. That's an impulse wave that has been corrected by the corrective wave. 1, 2, 3. Then we have another move. 1, 2, 3, 4, 5. So first wave, second wave, third wave, fourth wave, and the fifth wave. But as you can see clearly here, something is not very clear. Look carefully. Look carefully here. All right. You can see that this is, if I call this one the first wave and this one the second wave, all right. This, if I call this the third wave, you can see that this supposed to be the fourth wave is overlapping my supposed to be, okay, the first wave. All right. All right. See here. So there is an Elliott wave violation here. All right. So suppose my impulse wave, in fact, is starting from here. So, but we will say again, this one has cancelled it. No, it's not making any sense right now. So, okay, what we need to do, because there is an Elliott wave violation, we will restart counting our wave again, okay, and see, okay, whether we can find something that makes sense. All right, so when you are counting Elliott wave like this, and then you come across an Elliott wave violation, all you can do, you can look for, okay, a stable data, something that is true. And there is one here, all right? There's one here, a pattern that you can recognize. So there's one, you see this price went down like this, all right? And went up like this, okay? And then came down like this. Well, do you agree? And then went up again like this, all right? And then came down like this. This is 1, 2, 3, 4, 5, all right? So looking at this pattern here, the first thing that is coming to my mind is a flat correction. Now, my intention is that this video is not too long, but as you can see, we need to clarify everything before we close this video. So bear with me as I'm trying to explain everything to you here, talking about Elliott wave tips for a Forex trader. The financial instrument that we are analyzing is the New Zealand dollar, Japanese yen. So as I was explaining to you, when you are counting wave and you see an Elliott wave violation, you want to look for what we call a market stable data, a truth, something that is true in that messy condition. So you reach a point where it's not very clear to you. You look for something that makes sense. 1, 2, 3, 4, 5 down. You can see again these waves are overlapping. Okay, this is okay the C part of a flat correction. All right, this is the C part of a flat correction. All right. Okay, let's zoom into this session where we have the Elliott wave violation. Sometimes you may see an Elliott wave violation. You want to check out whether there is, okay, whether there is a distortion. There are sometimes you may see that we may have what we call a distortion, all right, in the financial market. All right, you may see something that we call a distortion. So what I was calling first, let's go back again. We call from here, we say first wave up to the top of this candlestick bar. Is it clear to you? Let's zoom into it more. And then we call this one here, the second here, the second wave, all right? And then we call this one here, the third Elliott wave, all the way here. But as we were counting the fourth wave, you can see that this is the fourth wave all the way down here. We came into the range of the first wave, all right? Now, you will see something very interesting here. It looks to me that those who are trading here, because it's quite choppy, that's what I was telling you here, it's quite choppy. But there's something else I'm going to explain to you in a minute. And then the price came down. We'll come back to this very shortly, okay? So the price came down 1, 2, 3. And then went up again in a straight line like this, okay? So pay attention to this from 1, 2, 3. Going to color them into orange. Elliott wave tips for Forex trader. Our wave analysis continues for the New Zealand dollar yen. So 1, 2, 3, a price bounce up. And I'm going to explain to you which pattern we have here, 1, 2, 3. Normally this one is not very clear, should be also 1, 2, 3. And then before coming down, 1, 2, 3, 4, 5. So this is a flat correction, an expanded flat correction. That expanded flat correction has started here and has ended here. At this point in time, all we can say to traders is a priority to bullish signal above 7566. Okay, for this currency pair, France, New Zealand dollar yen, priority to bullish signal above 7566 and priority to bearish signal below 7566. Because we are on the edge of the declining channel, you can see that this monthly candlestick bar is not yet closed, but is popping out of the bearish channel. So therefore, in a normal condition, we prefer to break above that level of 7566 and then to pull back and retest it. That will constitute a bullish trading setup on the edge of 7566 price level. All right. So a flat correction is now in place. This is what we are talking about. Though we have a bit of confusion here, we have a clear-cut flat correction. All right. That has started here and has ended right here. All right, so we have a stable data, something that is true. A pattern that is clear and neat on our chart is an expanded flat correction. So we know also that with the expanded flat correction, if we apply Fibonacci extension to the fifth wave, all right, are you getting it now? All right. All right. If you apply a Fibonacci extension to the fifth wave, here it is. So we count this one 1, 2, 3, 4, 5. Yes or no? If you apply Fibonacci extension to the fifth wave, the top of the expanded flat correction is usually in the zone of 138.2% Fibonacci extension level of the fifth wave. So let's try to apply Fibonacci extension to this fifth wave here. Are you getting confused? All right, if you are, it means that you need to subscribe to 24, okay, Elliott Wave YouTube channel. So the 138.2% is the dotted line above the red one here. If I move the red line a bit on it, that's the level here. That's the 138.2% Fibonacci extension level of that okay, fifth wave. So our flat correction, the top of our flat expanded flat correction, the expanded flat correction is in the zone of 138.2% Fibonacci extension level, all right, of this okay, price action. So therefore, in that case, what I can say, looking at all this messy price action here, it looks to me that we have a complex flat correction. So we have 1, 2, 3, and then probably bounce up. This can also be subdivided into 3, but in fact, our flat correction has started here. So that's why we have this violation here, the Elliott Wave violation here. Unless this is a distortion. Feel free to disagree with my wave count. So in my view, looking at the mess that we have encountered, the Elliott Wave Principle violation that we have encountered here, it looks to me that we have a complex expanded flat correction. So here it is. So the pattern, the flat correction has started first here. So we see 1, 2, 3 down. All right, and then it went up again, 1, 2, 3. Pay attention carefully, my friend, especially if you are new, okay, to the subject of the wave principle. If you want to know more, okay, subscribe to 24 Elliott Wave YouTube channel, where I'm busy discussing the wave theory. All right. All right, the first reaction, so we count 1, 2, 3, 4, 5. This is a multi-wave, followed by a correction, 1, 2, 3. But then we have 1, 2, 3 up. Are you following? Are you with me? All right. You can replay the video anytime you like. Then we have 1, 2, 3. All right. And then we have what we call X. Then we see this move here. Then the price pull back a bit. So 1, 2, 3. And then we have this move down. Color that one into pink. No, not that one. This one. 1, 2, 3. 1, 2, 3. That's it. That's what. Oh, it's getting a bit complex now. This is the one I want to color now into pink. So, what is going through the mind of traders? So you see they counted first wave, second wave, third wave, fourth wave, and the fifth wave. So here we have 1, 2, 3, and then 1, 2, 3 up. So at this point in time, the reason why I color this move down pink is because the C part of the flat correction at this point in time, remember what I said to traders before, that the Elliott Wave count is dynamic, one step at a time, and we are following the price without assuming anything. This is one example here. So you see the flat correction is developing here. We have 1, 2, 3, and then we have 1, 2, 3 up. All right. So at this point in time, people were expecting the C part of the flat correction to be formed here. So they are expecting the C part of the flat correction because the flat correction is an ABC corrective wave. So they were expecting the C part of the flat correction right here. But it did not form. It just went down a bit like this. Now making our wave count more complex. You see here? But then we have this move up. This is what we call X. And that one I'm going to color it, what is the best color to use for this one? X, I'll color the X into red so everybody can see it. Alright, that's the X. X, and then we have again 1, 2, 3. Alright, and then we have this move up, which is not subdivided into 3, but normally it should be subdivided into 3. But sometimes it will just go up in a straight line, which is the case here. Boom, up. All right. So now we have again, so the flat correction that has started here, 1, 2, 3. All right, 1, 2, 3. The C part did not happen here. That's the pink line here. Now, people were assuming that the price will continue to go up. Again, that's a failure of a new trend. The failure of a new trend between two corrective waves. That's what we call X wave. This is X. The pink one is the C part of the flat correction, the first flat correction that has failed here. We did not see that C part. Then the price tried to go up, forming the X part of a complex Elliott wave. All right. Then we have again 1, 2, 3. All right, and this move up in a straight line. All right, this move up may have internal wave of 3. So 1, 2, 3, normally 1, 2, 3, but it went in a straight line. And then coming down, 1, 2, 3, 4, 5. You have to understand that our wave count became a bit challenging as we have noticed that there is an Elliott wave violation here because our supposed to be the fourth wave was overlapping our supposed to be the first wave. For those reasons, there is a bit of complexity that enter our Elliott wave analysis. Therefore, in a chaotic situation, in a messy situation, we must look for something that is true. Okay, we're looking for a pattern, something, a market stable data, and now we see that the price came down 1, 2, 3, 4, 5, and it was overlapping each other. This is a corrective wave. So this move 1, 2, 3, 4, 5 move down is the C part of the expanded flat correction. You have to understand that I use also the Fibonacci extension applied to the fifth wave to validate my expanded flat correction. Because when we apply the Fibonacci extension to the fifth Elliott wave, the expanded flat correction will, the top of the expanded flat correction, okay, will be at the 138.2% Fibonacci extension level of the fifth wave of the trending phase. So this is the trending phase. 1, 2, 3, 4, 5. That's the trending phase right there. Okay. And by applying the Fibonacci extension to the fifth wave, we have the 138.2% Fibonacci extension level for that point. helping me to filter out the confusion that were arising in my wave count. Now, for new trader, you will find this a bit confusing, a bit challenging, a bit complex, but you may take it one step at a time. So when it becomes confusing, okay, remember what I said to you. Whenever you are counting Elliott Wave, it becomes too complex. You want to look for a market, a stable data, something that is true. Look for pattern. Look for something that is true. All right. So sometimes they say, Joe, you are repeating yourself. All right, because you understand it very fast. Okay. Some traders we need to repeat it for some traders. All right. So some traders may say, Joe, thank you for clarifying it more time. Some traders that can understand it very fast, especially if you are more advanced trader, you may understand things faster than other traders. So you may say, Joe, you are repeating yourself so much. Well, maybe not. Okay. All right. So 1, 2, 3, 4, 5. That's the flat correction completed here. But our flat correction in fact has started here. But you can see that the C part of that flat correction has failed here. And then we have the X, making our corrective wave a complex corrective wave. Now we have 1, 2, 3, and then another move up, and then 1, 2, 3, 4, 5. At this point in time, we will forecast that the New Zealand dollar, Japanese yen has a high chance to go up if it finds support above the 7566. Priority to bullish signal above 7566 and priority to bearish signal below it, okay, because it's now out of the channel. Remember that this candlestick bar is not yet closed at the time when I'm recording this video, because today is the 17th of November 2016. That candle will be closed on the 30th of November 2016 before one can look for trading setup, especially on the monthly chart. Right? Unless one is using weekly chart or daily chart, one must wait for this candlestick bar to close first. All right, so let me remove my Fibonacci drawings from the chart, and I'm going to apply now Fibonacci drawings to the C part of my expanded flat correction. All right. Hold on, please, traders. So I'm trying to adjust my line carefully to make sure that everything is accurate. Here it is. So now, anytime you see the C part of the flat correction is now completed. Now we are saying to trade a priority to bullish signal above 7566. The next resistance level that one must watch, because the price was in a declining channel, now it's going up. Which key level the professional are watching? Well, I'll show you now. Do you use Fibonacci? The 50% Fibonacci retracement level of that price action. That's correct. Okay, from here down to here, that's a 50% Fibonacci retracement level. So as this price going up, the ultimate target is 8196. 8196. That's the 50% Fibonacci retracement level. That's the level that the professional watch is also corresponding to the prior resistance level in the zone of 8196. The price can find a resistance before that. Okay, so watch out also the 61.8%. No, hold on, please. Let me readjust my line because from the top down, that's correct, yes. So the 50%, as you can see, is 81. Just adjust it. 8196. Okay, that zone 8196. And the next resistance that you must not forget. There are other key levels here that you must not forget. Color this one into pink. So ultimate target, as it's going up now, the 50% Fibonacci retracement level of the C part of the flat correction. So if it's bullish up to this point, secure your gain or cash out. If you want to buy it again, allow it to brace above the 8196 and to find the support before you take it to the next resistance level at 8576. All right. There is another level here. Remember 7938 also. There is a resistance there at 7938, at 8576, and also at 9121. But the ultimate bullish target as it's going up, if it continue to go up, is the 50% Fibonacci retracement level at 8196. All right. This is the end of this tutorial about Elliott Wave tips for a Forex trader. If you have any question or suggestion or comment, put it in the comment section. And in due course, I will be recording another video to answer your specific question. We are the GSTW24 traders talking about Elliott Wave tips for a Forex trader. Happy trading to you all, and speak to you soon.